Right now, as we watch the ticker tape scrolling in real time, SMX, Security Matters Public Limited Company, is trading at exactly $326.99. That is a staggering intraday surge of $185.99, representing a massive 131.91% gain just today. If you are looking at your screen wondering if that decimal point is in the right place, you are not alone. This is the kind of price action that stops the entire trading floor in its tracks. We are looking at a stock that has more than doubled in a single session, tearing through resistance levels like they were made of paper and forcing every algorithm on Wall Street to recalibrate its risk models. When you see a move of this magnitude, the immediate expectation, the gut reaction that most seasoned traders have, is skepticism. The expectation is that this is a technical glitch, a fat finger trade, or perhaps the final gasps of a short squeeze on a low-float penny stock that has undergone so much financial engineering it is barely recognizable. The expectation is that this is a trap for retail traders who are chasing momentum on their Robinhood app or trying to make a quick flip before the closing bell. But the reality? The reality is far more complex and fundamentally intriguing. The reality is that we are witnessing a violent collision between a heavily shorted, recently reverse-split equity and a sudden influx of fundamental news that challenges the very way global supply chains operate. This isn't just a chart going vertical, it is a market reckoning regarding the value of truth in physical materials. To understand why SMX is commanding this level of attention, we have to look past the green percentage sign and look at the market mechanics driving this engine. Today's volume is nothing short of explosive. We are seeing millions of shares change hands at a price point that is significantly higher than where this stock was just weeks ago. This kind of liquidity event usually signals institutional repositioning, not just retail clamor. It is the difference between a gambler throwing dice and a grand master moving a chess piece. While your average investor using Schwab Intelligent Portfolios might be allocated to broad index funds to avoid exactly this kind of heart-stopping volatility, the active trading community is swarming SMX because the risk-reward ratio has suddenly inverted. The catalyst for this move is not a rumor. It is a series of strategic announcements that have effectively reset the narrative for the company. We are seeing a market reaction to the proof economy. SMX has been quiet for a long time, dealing with compliance issues and listing requirements, which we will discuss later, but today they have effectively told the market that they are the new standard for verification. This 131% move suggests that the market is finally waking up to the difference between a digital receipt and physical proof. In a world where online investment platforms are flooded with companies claiming to be green or sustainable, SMX is providing the chemical evidence to back those claims up. However, we need to be incredibly careful here. The intensity of this rally is partially fueled by structural factors. SMX recently executed a reverse stock split. For those who are new to self-investing, a reverse split consolidates shares to boost the share price, often to meet exchange listing requirements. While this doesn't change the company's value theoretically, it drastically reduces the float, the number of shares available to trade. When you combine a low float with high-impact news, you get a powder keg. If short sellers were betting on this company to fade into obscurity, the sudden spike to $326 has likely triggered a cascade of margin calls. They are forced to buy back stock at any price to close their losing positions, and that buying pressure acts like rocket fuel for the share price. It is fascinating to watch how different demographics react to this. The Robinhood stock trading crowd often looks for these low-float runners, sensing the momentum and jumping in. Meanwhile, more conservative capital parked in Fidelity Investments or managed through Fidelity Wealth Management accounts tends to wait for the dust to settle. But today, the dust is not settling, it is being kicked up into a storm. The price action we are seeing right now at $326.99 is a test. It is testing the resolve of the bears and the conviction of the bulls. Is this a one-day wonder, or is this a repricing of the company's future cash flows? Let's talk about the specific news driving this, because it's essential to separate the hype from the substance. SMX, or Security Matters, effectively digitizes physical objects. They have developed a technology that allows them to mark any solid, liquid, or gas with a unique chemical marker. This marker can be read by a proprietary reader, revealing the object's history and authenticity. Think of it as a DNA test for inanimate objects. This is critical for circular economies. If a company claims their sneakers are made of recycled ocean plastic, SMX can prove it. If a jewelry store claims their gold is ethically sourced, SMX can prove it. In a world of greenwashing, truth is a premium commodity. The company's shift to focus on the proof economy is a smart pivot. They are moving away from just selling a chemical marker to selling a platform. They are trying to become the operating system for supply chain transparency. This aligns with global regulatory trends. The European Union, for example, is cracking down hard on supply chain opacity. If SMX can position itself as the regulatory compliance tool of choice, the total addressable market is astronomical. This is the blue sky scenario that bulls are buying into today. They are not buying the revenue of today, they are buying the potential monopoly on truth tomorrow. However, we must balance this optimism with a cold, hard look at the risks. The expectation versus reality dynamic works both ways. The expectation now is that this 131% gain is the start of a new trend. The reality could be that this is a liquidity event for long-time holders to exit. The company has a history of burning cash. Developing deep tech solutions is expensive, and rolling them out globally is even more expensive. The recent financing deal is positive, but it is also complex. Equity purchase agreements often allow the investor to sell stock into the market, which can cap the upside. Furthermore, the reverse split we mentioned earlier is a double-edged sword. Yes, it got the stock price up to a respectable level, likely saving them from delisting threats on the Nasdaq for now. But reverse splits are often viewed negatively by the institutional community. It signals that the company failed to maintain value in the past. To regain the trust of major asset managers, the kind who run Fidelity mutual funds or Fidelity IRA accounts, SMX needs to show not just a spiking stock price, but sustained revenue growth and operational discipline. They need to transition from a story stock to a metric stock. If you are a self-directed investor, perhaps using SoFi Active Investing or managing your own Interactive Brokers stock trading account, you have to decide what your time frame is. If you are a day trader, today is paradise. The volatility allows for massive scalps. But if you are an investor looking for a long-term hold, you have to ask yourself if you believe in the management team's ability to execute. Can they turn these pilot programs and partnerships into recurring revenue? Can they integrate their tech into the manufacturing processes of Fortune 500 companies without slowing down production lines? The involvement of digital assets in their recent press release is another interesting angle. By tokenizing physical assets, they are tapping into the digital adjacent market. This often attracts a younger, more aggressive demographic of investors, the Robinhood crypto and SoFi trading platform users. These investors understand the value of a digital ledger. Merging a physical chemical marker with a blockchain ledger is a potent narrative. It essentially creates a physical NFT, a non-fungible token that is tied to a real-world object that cannot be swapped or counterfeited. This bridge between the physical and the digital is where a lot of capital is trying to flow. As we move toward the final hours of the trading session, the price of $326.99 is holding. This consolidation at the highs is bullish. It suggests that people are not just selling the rip, they are holding for more. But the danger lurking is the overnight session. In these volatile names, news can drop at any moment. A secondary offering, a clarification of the funding terms, or a regulatory filing can send the stock tumbling just as fast as it rose. This is why investment help and proper risk management are so critical. You should never trade a stock like SMX with money you cannot afford to lose. Let's speculate on the future outlook for a moment. If SMX can maintain this price level, it changes their cost of capital. A higher stock price means they sell fewer shares to raise the same amount of money. This is less dilutive for existing shareholders. It creates a virtuous cycle. Success begets capital, which begets more success. The next major catalyst to watch for will be the announcement of a commercial-scale deployment. We have seen pilots, we have seen partnerships. Now we need to see a major multinational corporation say, "We are using SMX for our entire product line."